We have Dorothy in Toronto on the line. What's your question, Dorothy?
Hi, David. I'd like to drill down a little deeper in the technology comments you made earlier. You talked about semis being more economically sensitive and software being more defensive. Where do you peg internet security in that food chain? Do you like it specifically within the tech sector? And I mean, some of the names that come to mind obviously are Fortinet, Palo Alto, Checkpoint. Wanted to get your view on that. Thank you.
Okay. So Dorothy, the security software companies are software companies. So they fit in with the software group. They are not inexpensive stocks, but this is a secular theme, meaning multi-year theme that is not going to go away. And so this is why this group has been, really in favor, because companies are being forced to spend a lot of money, and I would expect it will, continue to happen. In the very short run, they're a little extended away from the longer-term moving averages. Like the 50-day on Fortinet is trading at around 75, and the stock's around 85. So it certainly could pull back in a few dollars, but I like the space. I run a macro fund, which is investing in macro secular themes, and I use ETFs to do it, long and short. And I have had HACK, H-A-C-K, which is an ETF which owns the basket of the security software companies. It's been a great hold. So I expect over the next year you probably do very well. I just would say in the very short run, and I'm saying very short run, there's a little bit of money rotating out of tech to get to the industrials and to get to the financials. But I think that the security software group looks really, really interesting.
We have Oshid in Toronto on the line. What's your question, Oshid? Hello, Oshid, you're on the air. What's your question? All right. Through the wonders of technology, we know that Oshid wanted to talk about CCL. What's your opinion on CCL? Yeah,
CCL has been a bit of an erratic trader over the last year. This has been a great stock to own over a long period of time. It used to be very illiquid, hard for institutions to buy, less illiquid today. But it sort of gets lumped in with the consumer staples group, even though it's really more in the packaging space. But traded at a high of 71 back in about June of 17, and it's trading at $60 today. Just not participating in this market. I think there's probably better places.
We have our young investor, Dave, in Toronto. Money to put to work in the market. What's your question, Dave?
Hi. My question is about FedEx today. I see that it dropped down from 265 to about 245. I think they missed their earnings. I'm not quite sure. And I just wanted to ask the guest, what does he think of the stock? Does he own it in his fund? And would he buy it at this level? Because it has a really good PE ratio. Its dividend is only 1%, but its payout ratio is about only 11%. So I want to hold it for the long term. And would he buy it even though these trade wars are circling? Thank you.
All right, FedEx, what do you think?
Dave, I like the transports. Transports are really attractive. It's one of the reasons I'm bullish on this market. Transports recently made a new high. You can see that in IYT, which is an ETF, or XTN. I would prefer to buy a rail stock right now, and I considered using one today. You could look at a CP, or you could look at a CSX, or Kansas City Southern, KSU. They are benefiting from North American strength. And I think that there's an opportunity there. I would focus there rather than the FedEx or UPS.
We have Charles in Vancouver on the line. What's your question, Charles? Hello, Charles. You're on the air. What's your question for David? So we got troubles tonight. All right. Again, we are mind readers here. We know that Charles in Vancouver wanted to talk about Facebook. What do you think of Facebook?
Well, stock's broken technically currently. The whole social media group have come under pressure. Here's the way I look at it. When the market's rallying, you want to own things that people care about now, because we only get rallies from time to time. And in the very short run, there's a little bit of noise around the social media stocks. And until I see the technical picture get better, I'm not re-entering. So I think that I would wait for a better entry point.
I know one of the concerns in this space, obviously, is that Washington has their eye on them. They're being hauled before politicians to explain themselves. So people are worried about regulation. So in the short term, that makes sense. There'll be pain. I've seen the argument, though, saying, well, you know, other industries are regulated, and down the road, they'll probably make money and come through that regulation.
Yeah, hey, listen, here's a generic comment. When a stock breaks, in this case, from $218 to $163, there's a lot of stranded investors at higher prices. And so what happens is when the stock starts to rally, it's got to chew through all those people who waiting for their money back. I just want to fight through that right now. I want to own things that are performing well, that have good fundamentals, that don't have an overhang. So I just think there's better places currently.
All right, year to date, Facebook down 7.5%. We're going to be back after the short break. The top picks are coming up next.